Hello traders, Nick Shaheen here looking at Amazon, but not so much from the trade alert potential, but to explain the line. Someone asked me today, a friend in the chat room asked me, speaking of chat room, down below in the description there's a link to it. We do good work, especially like on days like today. We were ready for the levels. Today is the 20th where we had red. Oh my gosh. Well, we haven't closed yet, but we were red in the morning. So they asked, is it going to be up or down tomorrow, talking about the markets? I said, I don't need to know. I knew where the support today was and where the levels were with trigger short, and so I know where to enter. And if I knew where the support were, then I know where to buy the dip and where to exit the dip. So I don't need to know what tomorrow brings, because for that particular trade we were talking about, it doesn't matter. It mattered is that I was prepared for the day. So the concept translates into trading stocks like Amazon on higher time frames. It's the same concept, only at a higher time frame. So this is a 2-hour chart for Amazon, and clearly all-time highs broke out. So what do? So I put all these orange lines to kind of explain. It's a lot of lines, but it's like I don't usually put the lines. If I'm looking at the charts, I know where they are, but to explain this concept. These are actual alerts. So if it crosses this line, I will get an alert. Today it came close. So the first level of uh-oh would be this orange line at 2120. So there should be support there. So if somebody wants to buy, quote, buy the dip, even though it's like you can squint to see the dip. I mean, this is an all-time high, and that's the dip. To me, it's not. Nevertheless, if somebody's itching to go long Amazon because they believe, this is where they buy, anywhere close to that line right there. So with a tight stop, what does that mean? Because if it goes below it, then you have to know that it triggers more selling. Chances are the next line won't be until here. So as a trade, if I went long Amazon for a trade on a buy to dip, I should get out with a stop loss level. Depends on my own personal preference of how much red I want to see. But if I'm in it for years, then it doesn't matter. All this is moot. So this would be the first level of must hold, buy the dip level, if so with a stop loss. Okay. Now if I don't and I want to wait for the breakout, then I would chase the breakout above here. So I don't buy it until they prove to me that they can break through. Because if they do break through, there's open air. As long as markets are rallying and central banks are printing, and more viruses, more stimulus, then, the moon. But this is how I would translate I don't need to know what tomorrow brings. If I know where the levels are, and if I buy at the right levels and sell at the right levels, then I should do well. So let's say I short it here after they lose this. This is where I book my short. So I'm approaching it from different angles. The bull wants to buy the dip here. They would with a tight stop. Oh, I was wrong. Okay, let me out with a small loss. The bear would say, as soon as this breaks, I'm going to short it because it's going to here. And this is where they get out. And if it goes above this, they say, okay, stop loss, I'm out. The opposite of the bull. So the levels matter. And this level is definitely important. This level / zone is also important from the history. This level here down to 2024 is also important. So this would be a buy the dip place too. Like if the market's tripped 2-3%, this is probably going to come pretty quickly. I mean, this is a momentum stock. It runs really fast. Okay. And the final leg would say, if I really want to buy the dip, I would buy the dip where it gapped from the earnings with a really tight stop. Because look at this gap down here. Gaps like to fill. Not every gap gets filled. But this tells me that with conviction, the bulls bought it that day. Okay. With conviction. So it should be good support. Plus it ran through 3 or 4 different supports already. So unless the market's really turned, this should hold, and this would be a best place to buy the dip, because this is actually a dip. An 8% drop would be a decent dip. 10% is a correction. I think that's how they call them. 20% they're in recession. So they call it a correction, 10%. This is pretty darn close. In this day and age, we should be lucky to get 2%, right? So this is the concept translates into other ticker as well. I mean, this works on the SPY, this works on the SPX, on any index or ETF, on Roku. Now Roku is fighting for survival here, otherwise they're going to test the century mark. And this has been developing for a while, and they're halfway through, so they must. So this is a good buy to dip place for Roku, but this is a momentum stock with very little value in it. I shouldn't say that. It has a lot of froth in it, perceived froth that may shake out. So if I do buy the dip, I would have a tight hand on it, short leash on it. So I would say, okay, I can only take 10% red or 20%. This is different from person to person, or 15% red, and then I'm out regardless. You know, it's a trade. I don't want to turn it into an investment. So the concept is, I don't need to know tomorrow's price. I need to know that I'm getting in at the right place, or at least I'm not doing the wrong thing at the spot I'm at. So up here, somebody going long up here made a mistake because this has been failure for a while. In fact, I went on Twitter and I shared and I said, this is not an obvious place to go long. That same day, the stock dropped 30, 40 bucks or whatever. So that was a good point. I didn't know what was coming. I knew that it wasn't the right place to start. And that's the point of this video. I guess I should have done it on Roku now in hindsight. So the point of this video is, I don't need to know tomorrow's price. I just need to know I'm not making a mistake. And up here, it was a mistake to start longs because of its prior failure at this point, and it was an emphatic failure at that. Okay, Nick signing out.